As executor, you're basically the IRS's point person for the decedent and the estate. Your first moves are practical. Get an estate EIN and file Form 56 to tell the IRS you now have authority. Then you handle the tax filings that may apply. The decedent's final Form 1040, the estate's Form 1041 during administration, and possibly Form 706 for estate tax. On the EA exam, they love who signs what and who files what. Form 56 is the IRS notice that a fiduciary relationship exists. Translation: I'm the executor. Talk to me. It also helps avoid IRS confusion when you sign returns or request transcripts. Signature questions are common. The executor signs the decedent's final Form 1040, signs the estate's Form 1041, and signs Form 706 if an estate tax return is required. A quick exam tip: if there's no appointed personal representative, the IRS may not accept just anyone signing. Executor fees are always taxable to the executor. The real testable issue is where they go on the executor's Form 1040. If you're not in the business of serving as an executor, like a friend or family member doing it once, report the fee as other income, no self-employment tax. But if you're in the trade or business of being an executor, think a professional fiduciary or estate attorney, then it's Schedule C income, and self-employment tax is in play. Here's the trap: distributing assets too early. The estate's tax liability attaches to estate assets first, but if the executor pays beneficiaries before paying required taxes, the IRS can pursue the executor or the beneficiaries. The exposure is capped. Generally, liability is up to the value of assets distributed. Another exam favorite? An insolvent estate doesn't magically create personal liability unless the executor improperly distributed assets instead of paying taxes in the proper order. Picture this: the executor hands out stock and cash, then later discovers a Form 706 filing requirement and estate tax due. That's when what can go wrong becomes personal. If you distributed assets before determining and paying the tax, you may have to make the IRS whole up to what you distributed. The clean process is boring but safe. Inventory and appraise, determine filing requirements, file and pay, then distribute. Boring is good on this topic. One more point that shows up in executor scenarios: income after death is usually estate income, reported on Form 1041 during administration. The decedent's final Form 1040 covers income received before death, and it's not a short tax year. Also, watch for IRD, income earned before death but received after. IRD is taxed to whoever receives it, the estate if it collects it, or the beneficiary if it's distributed to them. That who received it detail drives the answer. Ethan is 32, single, no dependents. He's self-employed and files Schedule C. This year, he only has $4,000 of net self-employment income. Which taxes will he likely owe? The choices include no taxes because income is low, income tax only, self-employment taxes, or both self-employment and income taxes. Think about it. The correct answer is self-employment taxes. Net earnings from self-employment of $400 or more generally triggers SE tax, even if regular income tax ends up being zero after the standard deduction. The tempting wrong choice is both, but at $4,000, he may owe no income tax while still owing SE tax. Natalie ran a bridal dressmaking business using the cash method. She dies January 1st, and she was owed $20,000 for a dress she made. The vendor pays on March 1st, and the check is made to the estate during probate. The beneficiary is her son, Ethan, but the $20,000 is not distributed to him before the estate is settled. Where is the $20,000 reported? The estate's Form 1041, Ethan's Form 1040, split between returns, or Natalie's final Form 1040? Think about it. The correct answer is the estate's income tax return, Form 1041. This is income in respect of a decedent, earned before death but received after death, so it's not reported on Natalie's final Form 1040. IRD is reported by whoever actually receives it. Here, the estate received the check and didn't distribute it to Ethan before settlement, so it stays on the estate's Form 1041. A tempting wrong answer is Ethan's return, but he didn't receive it.